Now, obviously, we've got the markets that are looking at sort of the post-Brexit world. Really, we've had significant volatility in recent weeks, and that's not really going down too much. I mean, I'll show you a chart of the volatility on sterling options, 1 month sterling options. They're still up at 16. And that is still very high. You can see that the elevated volatility are well above the general election and the Scottish independence referendum, and still at levels that we had around the election of 2010. Obviously, we actually peaked in the volatility above the height of the financial crisis just recently on the Brexit vote. It has been reduced, but it's still incredibly high. And what we've seen in the last sort of day or so is again huge moves on sterling, and that is something that the markets are still looking at. So that is sterling 1 month options. 3 month options again still elevated in terms of the volatility. Interesting that we're seeing volatility also on equity markets. Now, here we have, sorry, some Chinese yuan. I'll talk about that in a bit. Here we have equity market volatility on S&P 500 options, and what we've seen is the volatility coming sharply down. It's back sort of around levels that you could argue is reasonably complacent. And just looking at the FTSE volatility as well, you can certainly see a negative correlation between FTSE volatility and the FTSE 100 index. And FTSE volatility is still very low, or has fallen away to be very low in the last few days. Now, you could argue, is that a little bit of complacency creeping into the market? Well, I think FTSE is a little bit of a different kettle of fish at the moment, because we're seeing, and I'll talk you through this in a bit, but you're seeing FTSE 100, which is going strongly higher on the back of the weaker sterling. So any sort of sterling weakness, the big selling pressure coming through sterling, that is actually having a positive impact on FTSE 100, because you're seeing FTSE 100, which is around about 70% of FTSE is foreign generated revenue, and that obviously will benefit to quite significantly on the back of the weaker sterling. So that is certainly an impact on FTSE, but other equity markets are perhaps not so positive. Certainly the DAX and the CAC in Europe are not all that well positioned. Other factors, key issues that we're looking at is obviously politics. Now, the internal UK politics, leadership battles for Conservative and probably Labour as well, not even to mention the UKIP, Nigel Farage quitting as well. You're having political overhaul in UK, and what does that do for markets and confidence for the UK economy and also UK asset classes as well? I mean, certainly sterling is the main factor, is the main dry sort of market that will be under pressure on the back of that, but also potentially sort of seen through UK focused equities as well. Now, the UK FTSE 250 is under significant pressure still, despite the fact that the FTSE 100 is trading up around highs, is up around sort of 2016 highs. The 250 is still under a lot of pressure. That's because it's UK focused rather than international focus, which is what the FTSE 100 is. Impact on Scottish independence. What are we looking at in terms of whether the Scottish nationalists will now push for another independence referendum? It's probably likely that highly likely that they will. Whether they would be granted another independence referendum is another point. I think it probably depends on what the polling data suggests. However, would the whole of the UK actually be ripped apart? What's the EU reaction? Well, obviously Jean-Claude Juncker has been fairly steadfast in his opposition to UK generally since the Brexit vote, and he's not letting anyone talk to UK commissioners, and it seems as though that he's also sort of saying that there'll be no preliminary discussions either. So he's being pretty pretty sort of staunchly against the UK, and you could argue rightfully so, but also I think it's in the EU's best interest as well to sort of talk to the UK and get the best out of what looks to be a bit of a ropey situation at the moment. In terms of impact on the economies, well, the impact on UK growth is fairly high. You have sort of the outlook from the IMF suggesting that the impact on the UK economy or GDP could be between -1.5 to -4.5 by 2019. And S&P, the ratings agency, came out the other day and said that the UK would barely escape a fully fledged recession. I think the interesting factor could come through in the PMI data, actually. And you've already seen the construction PMI falling to 46, well below the 50 level, which is into negative territory, into contraction territory. And you could well see a trend of that coming in the next few months, and that would certainly put pressure on UK growth. I mean, a lot of the banks are saying that UK could fall back towards zero growth. I mean, growth in the UK at the moment is running around about sort of 2%. It could easily come back. I mean, the Bank of England thinks that a negative impact of Brexit could be around 3% in the next 18 months. So you could see that 2% growth wiped out for the rest of the year potentially, and negative growth or recession in the latter stages of this year possibly, but more than likely into 2017. I think you'd imagine. What's the impact on the eurozone? Well, how is Brexit going to be impacting the eurozone? Well, presumably negatively, because it's a big trading partner. So negative UK growth would be negative for the eurozone. What impact would that have on ECB monetary policy? 0.5% off GDP is what Mario Draghi was talking about. So it could still have quite a sizable impact on the eurozone and likelihood of pushing further monetary easing. But I'll talk about that in a bit. Rest of the world, I had read that UK could or Brexit could drive down global growth by around about 0.1%, but it doesn't sound a lot, does it? But certainly across the whole context of the world, that probably is quite sizable.